Hello everyone, and welcome back to another market review. This is Silent. We are looking at the NASDAQ December contract for 2025, starting off with a weekly chart, as always. Yesterday, we were expecting a significant rally for this week, just starting off the week bullish, not with any expectations of seeing much of a pullback yet, but today we saw that happen. So far this week we began to rally, and then today's price action brought us back lower, and we settled right back on top of the new week opening gap. Dropping down to the daily chart, we're gonna have to pretend that this candle does not exist yet. I took this screenshot shortly after 6 o'clock, so this is the Tuesday daily candle. I brought your attention to this wick on the daily chart. We traded down into it and rallied, and then today's price action, we have seen a decline right back over top of the previous day's range, and we got a closure below previous day's open and settled a little bit lower on the day. My expectation going into tomorrow would be maybe a small rally on this daily candle and see it start to decline. My eye is on this fair value gap, but I'm watching this level first to see if price is willing to drop significantly through it to head towards this gap, or are we going to consolidate here and then on the next day start to turn higher. Basically, I'm watching to see if this gap performs as a discount array still, or if it's traded through and then treated as a premium to head towards that fair value gap on the daily. Looking at the 4-hour chart, I've drawn a balanced price range and this sell side imbalance here, and this would be a drawn liquidity if we begin to sink lower after trading into this balanced price range here. There's no reason to see price trade higher than this fair value gap's high, because price went lower than this candle on the up close here, and then as we opened, we came up and retested this consolidation range here. So in my eyes, this range is efficient. The only inefficiency would be in this range here, and then we have one single pass and another single pass in both directions across this range. So that would be our main point of interest to see price turn around at and head lower. So going into 765 tomorrow, we'll see what we get after price reacts to that level on the way down. We may start to use this consolidation range as an area of selling and trade lower across the next day or two. And dropping down to the hourly chart, I've brought your attention to that same fair value gap we were watching a couple days ago, where we want to see if price could begin to fill in that wick and attempt to draw into this down close candle. Now that we've rallied a couple times, this level is going to be my drawn liquidity, because it's really this fair value gap here is inefficiently traded because there's only a wick in this range. So this sell side liquidity and this down close candle and this wick and then finally trading back down into the previous 4-hour ranges from last week's discussions. I'm watching that new day opening gap here to see if we can attempt to use it as support, rally, and then reject off of it going into tomorrow. On the 15-minute time frame, I was watching this buy side imbalance for Monday on today's action. Overnight, we consolidated, and then going into London, we did a manipulation move, kind of. So we stabbed up into the Asia range multiple times and failed to take previous day high. And then finally, after this rally up, taking out all this liquidity that was induced, we start to break down with fair value gaps that are more significant. We're shifting under lows and respecting them, the fair value gaps that were created. So going into the New York Open in the pre-market, we start to accumulate shorts after this shift on top of the new day opening gap, and then we break lower with displacement, leaving a fair value gap on the 15-minute chart. Price tags into that as an institutional order flow intradrill, and the bodies of that price action following begin to respect Monday's buy side balance after we drag it through time here. And then price delivers and cascades lower back towards, we were watching price deliver down into that Friday buy side balance that was used as an accumulation point previously. After we retrace, it starts to shift lower than the new day opening gap. This is a little bit extra because I took the screenshot later. We may see a manipulation draw back up into that balanced price range before attacking these lows. On the 5-minute chart, again, we had just a news barrage today, so it was stacked with red and orange folders all day. So that's what kind of brought this high resistance liquidity run to fruition, and is a main reason why we have to pay attention to what the higher time frame is doing and what those key levels are, because the lower time frames will be presenting in a high resistance manner. We can see how price accumulated in the London session, and then in the pre-market we see that kind of fake rally move going into 8:30, and then right around the opening of New York we stab up 3 times into this rejection block and this previous liquidity here, and then do that displacement. There's no fair value gaps on the way down, notice that, so we have to go back to the higher time frame and recognize that 15-minute sell side imbalance, which gets tagged right here in this wick. So after this stab up with this wick, everything to the right will be staged as a selling opportunity, especially after we begin to respect the constant encroachment of this wick and that Monday buy side imbalance. We are flipping its role after this shift lower, and it becomes a premium right here, continuously displacing to the downside. Every time we rally up, it's just taking lows again and strong candle body closures to the downside every time. I was entertaining the idea that we might try and swipe into this Monday buy side imbalance one more time during this, but after we get this drop lower and price begins to close below here, I'm back in line and watching this as a propulsion candle to the downside, and this is my timing tool to see when the large move should begin to happen. So whenever we see that just last little up close candle before the sell-off. It's good to pay attention to things like that and see them in previous price action so that we can expect them in the future. Cascades lower into the Friday buy center balance and then consolidates going into the end of the day, and then right on the close we draw back up into this new week opening gap. And on the 1 minute chart here, we brought down all of our levels from the higher time frame, and I've added the opening range and balance first presentation fair value gap there. Price continuously uses this as a premium array, and every time we trade up into it, there is a fair value gap produced in the opposing direction afterwards. So every time price trades up into there, it's significant selling, and shows that displacement characteristics while it's accumulating. So we trade up into it and then displace lower, but price is spending time accumulating because of the news coming up. So we tag it again, swipe out liquidity here, shift again with displacement. It's just grinding down everyone who's trying to time this move right on the news. So as you can see that even after 10 o'clock, going into 12, it's just consolidating and just loading up heavily on shorts. We can also see how that's occurring because of the large wicks on either side of every candle. Finally, going into the afternoon, Powell goes on and does his speech, and that's this price action here. And this is when we finally begin our significant push lower. This will be really our last selling opportunity, along with this fair value gap, because after that it's just so heavy that any trading in here just feels like it's chasing. We trade into that Friday buy side and balance, and then do a shift back up, trading back into our PM session first presentation fair value gap, and offloading those buys that were taken here in this fair value gap, and then it just putters out going into the close of the PM session opening range, and then we know how it trades back up towards the new week opening gap and swipes this liquidity going into the end of the day. All right, guys, so that's gonna be it for me today. Thank you for your continued interest. If you have any comments, let me know. If you found anything insightful, leave a like, and don't forget to subscribe. I'll see you tomorrow.